Hey everybody, hey traders, Chris Pulver here. It's been a while since I posted a video, just good old trust content, good old timeless evergreen, keep it seriously simple, trading 101, and I think this is an appropriate time to do it. I have some great tools and resources that I use on a day-to-day basis, helping me generate some great decisions, high probabilities, and I think these are things that all traders need to make informed decisions. Now, not everything's going to be a winning trade. I have losses, but I have learned certainly over the last decade of trading. I've been in the market since 2000. Okay, passively since 2000, actively when I learned from professionals, 2007, 2008 in the Forex market. That helped me be a much better stocks and options trader, portfolio manager, and certainly way more full time for the last 15 years. So now what am I most active with? Stocks, options, way more active. I trade indexes, I trade stocks. I'm looking for income every day or week. I trade earnings around stocks and major catalysts, the big news like FOMC, non-farm payroll, inflation data, what's happening in the macro picture. It's not just U.S. equities, but abroad. So any ADRs in China, ADRs in the UK, stuff like that. So stocks and options very active on a day-to-day, week-to-week basis. Forex, I've gravitated for the last 10 years in Forex trading to be more of an investor. I find big patterns on monthly, weekly, daily charts. I trade those patterns. And I essentially see myself as investing in areas that I'm interested in, buying extremely low, selling extremely high, and going after high probability trades and clusters of profits. So I like to trade to big pocket clusters. I like to trade to pivot clusters. I like to trade overbought, oversold conditions and extremes. And I also, this year in particular, 2023 and 2024, I've been doing a lot of carry trade positions on the Japanese yen and the Swiss franc, especially. And it's going pretty well. So, investor in Forex, active in stocks and options. I trade futures as well, primarily with options. I've been in crypto since 2016. That's a lot of stuff to keep track of. I'm handling, broker accounts between TD Ameritrade, Thinkorswim, Tasty Trade, and broker platforms for Forex, Oanda, and I'm trying to think what else. Global Prime Forex and Devisa, Pepperstone, and I think that's it for right now. I think that's it. So there's a lot going on. But if I could have you sit down next to me, plug into my eyes and see what I see, these are some of the tools and resources that I wanted to share. So diving into what you see on the screen here, the first thing I'm going to start with is if I'm going for day-to-day probabilities, I'm looking at an Edgeful dashboard. Now, Edgeful is a company that came to me, approached me on my YouTube channel, reached out. I've spent several hours with the developer of Edgeful and the team. And the nice thing is if I want anything, I can make requests. And so I've asked for certain reports to be built. That's in process on a day-to-day basis. I'm looking at the SPY, the Qs. I have detailed reports going back from year to date to 1 year to 2 years to 5 years, probabilities every single day of the week. Things that I look at every single day. I'm looking at price gaps, whether we fill or don't fill. What's the probability? Red and green days. If we close red one day, what's the probability of closing red the next day? Close green again. Also the previous day's range, average true range on a day-to-day basis, week-to-week basis is really important to me to see how I'm going to position for trading stocks, trading indexes, trading options, because there are days where the market is likely going to be range bound, and I want to be a seller those days of options. And there are days where the market's oftentimes directional, and I'd like to, with good entries and precision, I'd like to be a buyer of options those days. So I know the last, year plus, I mean, this happened in fall of 2022. Zero DTE has been around for almost 2 years now. And I would say this, if you want a crash course in options trading, if you want to see how a long option or short option play out in a single day from start to finish, there is nothing faster than zero DTE. Now, that doesn't mean you jump in and start to trade it. But where I learned, it took me a couple of months. I was willing to experiment, keep a very detailed trading journal. And what I saw from day to day is if I place this trade, if I did a long option for a particular day, I would track and see how that trade played out. Based on what I read in price, was I right directionally? So, I use my intuition, I use my probabilities, I use my charts, I use my price action, and I see how prices play out from start to finish. Now, I don't want to deep dive into the zero DT stuff. If you want to spend more time with me on that, let's chat about it. But I want to show you how the tools and resources like Edgeful work for me on a weekly basis, especially. And when it comes day to day, whether I'm a seller of options or whether I'm a buyer of options, I know that I have an edge, haha, a bit of an edge, day in and day out, which is really helpful with that resource. Next up, I'm looking at tick feeds and price data from my option software. It's called Dynamic Trends. There's a couple proprietary indicators that I use in that called a gamma squeeze level or gamma squeeze index. And what that is we're looking at open interest levels around gamma squeeze levels, around the major liquidity levels in the market every single day. I look at the SPX, the NDX, the SPY, the Qs, and then I'm looking to see who's in control. Is it bulls in control with call option volume? Is it bears in control with put option volume? Day-to-day price action, gamma levels. What I like about this is very rarely do I see price surprise me beyond these gamma levels. Okay. So again, if I go to a directional day, I can trade towards those big, obvious gamma levels. If I'm already at those major gamma levels, I can look to position to maybe call the top of the day, the bottom of the day, and position with something more defined risk. So I'll show that as well. Also, going into the broker platforms, Thinkorswim is a fantastic broker platform. Tasty Trade is a fantastic broker platform. I love the fact that on a day-to-day basis, I have my charts with TradingView. I have my broker platforms up and running. I'm looking at the futures market day to day. I'm looking at the dollar index, oil, gold, silver, Bitcoin, indexes, and I'm watching my portfolio for positions. Do I need to manage something? What about days to expiration? What about probability of profit? What about in the money, out of the money? All these things come in, very quickly at a glance in the first probably 30 to 60 minutes of trading every single day. Okay. When it comes to Tasty Trade, if you follow their philosophy, very simple stuff. I love how they have so much content out there. If you watch Tasty Live, their IV ranks, and what's funny is some of their talking heads and their experts rarely look at charts, and they will just simply trade based on delta neutral. They'll simply trade on IV rank. And again, the options market is extremely efficient. And even from a zero DTE environment to a week to a month to the typical, Tasty platform or the Tasty philosophy is 30 to 45 day cycles. It's awesome. It's a methodology that works. So you go out 45 days, you manage it 21 days, good, bad, and different, and move on and go find another trade. So if you're interested, obviously you can follow Tasty and the Tasty Live team out there. They do a fantastic job. So this really encapsulates what I do on a day-to-day basis and a week-to-week basis. So I'd like to get into Edgeful, which right here, if I get this out of the way, move this out of the way, and let's go into Edgeful, which should be right here. Okay, so let's maximize this. Let's talk Edgeful. Now, what I'd like to look at first and foremost, let's start with the indicators and let's go to the average true range. Now I'm going to look at the SPY as my ticker and I'm going to go back. Let's go year to date. So let's talk right now. I'm doing this video. It's April 23rd of 2024. Year to date, is 2024 any different than other years? I mean, as the famous saying goes, I think it's Mark Twain, history doesn't repeat, but it rhymes, right? So there's a lot of similarities and correlations. And if I go year to date versus 5 years, here's what we're going to see. We're going to see some commonalities, maybe a few percent difference, but for the most part, the market's been doing the same thing for a lot of years. Maybe not the exact same thing, but similar with a bit of a nuance, right? So let's probe around on a couple of things here. So we have the average true range. Standard means this 60% of the time. Okay, and this is again year to date, so I'll go out to 5 years as well, so I can see the most data that I can get from Edgeful. But 60% of the time, the market is going to respect the day-to-day range. So if you're looking for a chance to trade, right now we're looking at a daily ATR. This is every 15 days or so. It's calculated looking back 15 days. We're looking at about a $6 move in the SPY. Okay, that's roughly a 60-point move in the SPX. All right, and you're looking at probably a 20% increase or so on the NASDAQ or the QQQ. So you're probably looking at 75 to 80 points on the NDX. You're looking at probably probably $7 to $8 on the QQQ. All right, but 60% of the time the market is going to respect the current daily trading range. So in the event that the market goes beyond that, that would be more than the standard deviation. That'd be more than what's expected. And that would be obviously a great day to be directional, where we're long an option and price keeps going. It blows through the ATR expected move, and you just keep moving stop losses and you gain, 3, 4, 500% on your positions, which can be done. If it is a day, this is one of my favorite things by weekday. This is why I also like to look at certain days of the week. So year to date on Mondays, right? Mondays, 71% of the time, which is a pretty big edge considering that 60% is the blanket probability. But Mondays, particularly 71% of the time, just this year in 2024, Mondays respect the daily trading range. Therefore, we don't see the market go much higher than $6. So if I can see price dip a little bit for the day, and then we start to push up on the day, I might look to position at that bottom and see if it will stay there. If we see the market drop very quickly 50, 60 points, the probability of finding a bottom after a 50 to 60 point move on the SPX, or $5 or $6 move on the SPY, it's pretty probable that we can sell options at those lows, or we can be directional into those lows and know where to take some profit. So by weekday, this really helps and shows me that Mondays is a great day to sell options. Tuesday, 69%, also very high. Wednesday shows 75%, respecting the range. That's crazy high. That's better than Mondays. But check this out. Look at the difference. If I go now, let's go back, 2 years. Okay. If I go back 2 years, let's see the comparison. 2 years on a Wednesday, now the probability drops to 62. Look at Mondays. 80% for the last 2 years. Mondays respect the range. Let's go to 5 years. Okay. 5 years. 73% of the time, Mondays respect the average trading range. Now, this is a number that will change. The more and more volatility we have, the bigger moves we see, this current daily ATR will change. When we started trading in 2024, we're probably looking at a $3.50 to $4.25 ATR that since 2024 has been trading, we have increased to almost $6 a day. That's a lot of direction. But remember, there's efficiency in the options market. There's efficiency in the stock market. So, we're paying for that volatility just as much as we like to sell it with higher IV. We're paying for it if we are, choosing to be long options. Okay. So I love looking at the ATR by knowing what the expected move is for the day. I also like to know what day of the week I could expect to see price respond and respect that ATR high and low. All right. So if I'm looking at average true range, that's really, really helpful. If you go range to ATR by weekday, what we're looking at here is most of the time we're going to see the market stay within the range. Okay, so right here it says Tuesday's average is 90%. The ATR is 5.99. You can expect the SPY to move $5.39 today. Again, talk about an edge, and I obviously I'm making a pun because it's called edgeful, but think about the ability to with a little bit of certainty and some probability, sell an option knowing that that's going to be safe. Buying an option knowing that you have a direction to play to. It's really helpful stuff. Okay. So average true range is really awesome for me. If I go into volume, I'm looking for volume by range and weekday. This is also important. It shows kind of the escalation of volume and the escalation of trading ranges every single day. If you look at the histogram, this is the volume by day. Notice here that Wednesday, Thursday, Friday, we tend to see an uptick in volume in the SPY. Directionally, we also tend to see directional plays on Wednesday, Thursday, Friday in the SPY. That's not by accident. Higher volume is going to push the market a little bit further. Think about the options market as well. Open interest levels, expirations on Fridays, monthly expirations, quarterly expirations, all these add up to higher volume to hit some of those big gamma levels and hit those liquidity levels and those big open interest levels, on those expiration times. Look at the range for the day. Quieter on Mondays, Wednesday, Thursday, Friday, a little bit more elevated. So if I want to be a seller of options, Monday, Tuesday typically are my better times to sell. Wednesday, Thursday, Friday, typically my better times to be long directionally. Okay. That's volume. Let's go into price action, gap fills. This is extremely awesome right here. So if I go into gap fills, this is what I look at. I look at the size of the gap. All right. So if the previous day's close and the new day's open, look at the percentages down here. A large gap in the SPY is going to be around 0.5%. Right. So if I look at this is really interesting. If we have a 0.5% gap, look at the probability of that gap not getting filled. So if we gap higher by over 0.5%, there's a 60% chance on a gap up that gap is not going to get filled for the rest of that trading day. Okay, this doesn't mean that it gets filled. Well, what about 1 day later? What about 2 days later? What about 5 days later? It's the day of trading. So if we have a close and an open and it gaps higher by 0.4% or 0.5% or 0.6%, the edge right here is that gap will likely not get filled. So a couple things can happen. If we see that we have a previous day's close right here, let me use the yellow line. If we have a previous day's close and we gap up, okay, I would like to see, and this is my personal watch for the day, I'd like to see price try to fade a little bit, and then I'd look to start positioning for one, if I can position a sell option down below the low and see if this will then continue up for the day, because the edge says we're not going to fill the gap, right? Edgeful says we're not going to fill the gap. So if I put a sell option down here like a credit spread or broken wing butterfly, I'd like to see that price respects that, doesn't fill the gap, and then actually goes bullish on the initial direction of the gap. So therefore, I can collect the credit right here and walk away with that option expiring worthless and collect the money on the day. Cool. The other option would be if we use this to go long, if we have that same idea where we have a close, we have an open, and it's gapping higher. If the market fades a little bit and then we start to see some bullish confirmation, getting long that option, and we shouldn't fill the gap based on this right here, okay, to a gap up. And if we also break the previous day's high or break the session high, I'm looking to see from an ATR standpoint, are we going to go $5.30 on the day? And if this is the low of the day and I go up $5 and change, and I can pay for a long option for $1, there's a lot of profit potential there. I can make $2, $3, $4, which a return on investment is ridiculous. Okay, so we can play it directionally. We can play it with sell options. So, I mean, whether you're short options or whether you're long options, there's a way to trade this, and that's with the gap up. Now, take a look at the gap down. If we gap down 0.4 to 1%, we also have a probability that the gap doesn't fill. So, again, it's an aggressive gap. That's a larger gap to the downside. Now, this is what's interesting. Let's go back, right? If we have a lesser gap, 0.2 to 0.4%, look at the probability of now filling. Smaller gaps tend to get filled. Smaller gaps tend to get filled. Smaller gaps tend to get filled. So even these fractional gaps, high probability we're going to get filled because it's a very liquid market. But once we see these, bigger, look at this 1+% gap, probability of filling that gap for that day's trading is very, very slim. Right? And anything over 1.5, rarely does that happen. That's a big move in the market to have a 1.5% gap. But again, you can see that most of the time those gaps don't fill. So use that information. That's going back 5 years. I've also go to weekdays. Also interesting, probability of a Monday filling gaps, right? Just 5 years, not based on size of gaps, just Mondays in general. If we have a gap down, right? So a Friday close to a Monday open, if we gap down 66% of the time, Mondays like to fill gaps. Another good trade to take. If we have a Friday close and we gap open on a Monday, 66% of the time for the last 5 years, we are filling that gap. Now, I might take this trade based on a directional play, but there's two things I could do here. If I trade it directional, I don't necessarily have to guarantee that I'm trading it for a Monday expiration. Maybe if I did this based on the week, and I know this isn't based on the week, but probability is we're probably going to fill that gap, in my opinion, for 1 or 2 days. All right. But that's just me. But a gap from a Friday, Monday, typically that gap gets filled. And we also have a range bound day on Monday with a high probability that we're going to be able to, see price respect to ATR. Good stuff. All right. So price action and gap fills. We've got a ton of different reports in here. Another one that I look at quite a bit is the previous day and the previous week's range. Let's go to the previous day's range. And this is where I'm going to lump in the TradingView indicator suite that Edgeful also offers, which I think is extremely awesome that they do this. This is for a limited time as well. So if you are interested in the Edgeful dashboard, if you're interested in the Edgeful software, let me know. You can leave a comment here in this video. You can join my Discord. You can send me a private message or direct message in Discord. I do have a promo code for this. I have an affiliate link for Edgeful that can save you some bucks on it. It's a great deal. I am also a subscriber to this software. So let me go back to this previous day's range. This is really interesting. If the previous day's high is broken 77% of the time for the last 5 years, if we break the previous day's high, the probability is we're going to close green on that day. So here's a good example. If the previous day, here's my high of the day, there's my low of the day, okay? Then we open up right here for a new trading day. If we go up and break that high, okay, probability is, if this already started with green, let me put this in green. If we started with green, chances are we're going to stay green for the day, which means if I want to be a seller, I can sell a credit spread or broken wing butterfly or something to collect some credit down here because we're likely going to stay green 77% of the time. If I want to be a directional player, if I'm going to go after that high and I measure out my ATR, I can go after that $5 or $6 move and plan around some profit potential right there with a directional play, right? So previous day's high, if it's broken, we typically close bullish on that day. Okay, now same thing here if you flip it around. If we break the day's low, previous day's low is broken, 77% of the time, we are closing red on that day. If you prefer to sell options, sell options. But you want to make sure that if it's going to close red on the day, your sell trades are out of the way, right? If you're long that option, you're looking to go long puts. If you're long this option, you're looking to go long calls. Try not to overpay. You can go in the money, you can go at the money or out of the money. But the goal is we're looking at a directional play for the day. And if we break the previous day's high, probability is we're going to stay green. Break the previous day's low, probability is we're going to stay red. Okay. And then by weekday, also something that's very interesting. Higher probability we break the Friday high, Monday's going to close green. We break the Friday low, Monday's going to close red. Now, one more thing I want to talk about. Check this out with this Edgeful stuff. Not only do they have this incredible, and this is just a sneak peek. I will probably end up having the developer Andre on my show on the Pulver Report, and I can just do a video with him and I can post it for the channel. We can do it live, doesn't really matter. But I like to have him as the real savant of Edgeful come in and show a couple of things as well. So if you'd like to see more, leave me a comment in this video. We just type in "see more." ... If you type that in the comments, let me know, because I can see that, I'll get Andrea on the show on the Pulver Report, or we'll do a video together and, give you a nice little 15 to 20 minute sneak peek at how this thing has really helped me be a better trader, make, quicker, faster decisions on a day-to-day, week-to-week basis. Now, I want to do one more thing for Edgeful. Take a look at this. If you are a subscriber to Edgeful, you also have access to TradingView indicators. So this is an invite only, but you have all of these indicators right here that are custom and proprietary for Edgeful. I have two of these on my charts right now. I have the opening range breakout, and I also have a gap fill. Now, another thing on the dashboard that I'll show you very quickly, if I go into opening range breakout, it is right here, initial balance breakout. So I'll go back for the last 5 years, but what's kind of nice about this is 64% of the time, the market is wanting to prove some type of breakout. Okay, so from 9:30 to 10:30 a.m. Eastern time, 64% of the time, the market's going to want to test the high, break the high, or test the low, break the low. Okay, a double break is lower probability. So if we break this 9:30 to 10:30 high, less probable that we're going to go both ways, but it does happen, just not a lot. Okay, most of the time, once we break, we typically stay there. So if we not only break the opening range breakout, but break the previous day's high, you already know that the probability are lining up for the day to close green, the day to continue bullish, the breakout to continue in that direction, right? So what rarely happens? No break whatsoever. So 9:30 to 10:30, the range is established. Nothing happens the entire day. Very, very, very seldom do we see that there's no initial test or breakout high or low. So within that first hour trading, that's also where there's a ton of volatility, a ton of scrappy. I'd say that's the gamblers that come in and just try to jump right into the market, providing some liquidity. But for me, I look at this chart right here, and this is my opening bell range. So over the last couple of days, this is a pretty simple one right here. Once we had price fill a gap, go directional on the day, and break out of the opening bell range. And we proceeded up for another, $4 to $5 to the upside. This breakout was around $4.98. This high was around $5.02. That's a $4 move. If we're buying options at noon or 1 o'clock in the afternoon, I'm telling you, noon or 1 o'clock in the afternoon, these options are dirt cheap. There's no time left in these trades. And so if you're taking a trade at, 50 cents for a long call option, $1 for a long call option, you can turn that, dollar call option into a $2 or $3 credit. That's a huge return in a single day. Okay. So this is what I like to look at when I see this day to day. I look to see if I have the opening range breakout. We break. Look at how well the market responds to this. We break, we retest, we go. That is your directional day trade right there, right? The next day, we break. There's a little direction. We come all the way back down and we settle back in at the opening bell's low of the day, right? The next day, we break the low, we retest, and we continue lower. So this not only acts as a nice little time segment for me to be patient for the first hour trading, but it also acts as a really reliable support resistance indicator for intraday trading. Okay. So that is one. We also look at some gap fills. If I show you this indicator here, let's go into gap fills and I'll get rid of the other one. You can see here that we did have a gap open and then the gap starts to close. Now this didn't fill the gap entirely, but the market certainly attempted to fill that gap. Here we are currently sitting with a gap up that hasn't been filled. right? So we gapped up higher. If price were to come back down, you'd see my blue shaded zone get smaller. But because we gapped higher and stayed high in the day, this gap hasn't been filled. So it's going to be interesting to see, again, edge full. I'm not looking to see, hey, how many days does it take to fill the gap? Doesn't matter. To me, this was a trade where we gapped up by X%, and that's really what I should be checking here. From this close to that open, we're up a 0.34%. Go back to your dashboard, go to your gap fill information, and this was on a Tuesday. So let's go to Tuesday right here. So go to Tuesday. We gapped higher. And probability is if we gap higher, okay, this actually shows here that 61% of the time the gap up is going to get filled. Now, this is by a weekday, okay, but if I go by size, we had a 0.3% gap. 64% of the time it says that gap should be filled. Now, here's how I would interpret that. Does it mean the edge full is wrong? No. What it means for me as a trader is for this particular trading day, because the higher probability is that we're going to fill the gap, what I would have been looking for today, because we did gap higher, here's what I was actually watching during the trading day. We gap up, okay? 60 to 64% of the time, we're looking for the gap to fill. So I was looking to see if price came down to fill the gap and then use that as support to then buy and go long for the day, because Tuesday is a little bit more of a directional day. We also took out the previous day's high. So it ended up being, a day where we gapped higher and we just continued to go. Truthfully, that's a tough day because you're essentially right out of the gates. You got to be long and you got to stay long. That's a tough day to trade. Now, I will say that the easier trade would be because we broke the previous day's high, we stayed green on the day. So that's a good indication also that we break out here from the opening bell or this level. If you go to your $5 move, your $5 and $6 move, that's another way to kind of plan out where this market was going to stop. So from the open to the day to the top, that's a $4.78 move from the previous day's close. And this is how I like to measure my daily trading ranges as well. From this day's close to the movement all day today, that's $6.31. That just eclipse the 599 expected ATR. So I'm rounding right around $6. So if I was directional on the day from this market's close to this market's open, I'm looking at about a $6 move. And we hit that move and we actually had a little bit more juice to it. All right. So again, two ways I can trade this. And I tried this today. I planned on a move. I tried to get filled at a credit spread up here. I was going to do a broken wing butterfly to try to collect about, 40 to 50 cents credit as long as price didn't go above 507. Now, the nice thing is I was correct on my direction. The problem is my credit didn't get filled. It was too late in the day. This was just a slow grind all day, and I didn't have enough premium left to sell late in the afternoon, like 1, 2 o'clock. I just couldn't sell it for what I wanted, so I didn't get the trade filled. But it gave me an opportunity to take the trade, right? So I saw a plan. I executed. I didn't get filled on what I wanted. I was looking for a gap fill to go long in the day. I didn't get what I wanted. That's trading. Sometimes we get what we want and we execute to the best of our ability. Sometimes we don't. For the sake of time, it's going on about 30 minutes for this video. I spent a lot of time on Edgeful, and I'd like to kind of keep this video focused on the Edgeful dashboard and information about it. Like I said, if you like this, I'd like you to leave a comment for me. See more, show me more, and I could bring on the developer Andre and his team, and we can spend more time on it in a live session, or I can do a video recording posted on my channel. But one more thing I want to do a quick glance is show you this. This is Dynamic Trends, just an option software that I use every single day with my Delta Trader trading room, as well as my Equities on Demand trading room. If I go to the SPY, I can see opening bell, closing bell, gamma levels. So before the market opens, this is the first thing that I'm watching. So today, as we came into the market, these lines right here were already on my chart before opening bell. So as we gapped higher, I was already looking for price to head up towards 505 for the day. I called it out in my trading room. I called it out in my live session this morning. I said the big gamma level today is going to be 505. So as a directional trader, I have the probability that we have with Edgeful, we're breaking that session high. We're breaking the previous day's high. We have a gamma level to go after. It just gives me a visual roadmap of what to trade to. So again, what did I need? Well, I needed price. Once we broke out right here, I wanted to see price just try to fill the gap a little bit and then go after that gamma level. So I was interested in going long at like a 500, 501 long call. I just wanted to pull back and I didn't get it. On top of that, so I have my gamma levels. That's a really nice roadmap. In real-time price, you can see that the day unfolded like so. We had a gamma level, continue to get larger and larger at 505. We also had some ones print up here as the open interest is changing. And this is what happens with zero DTE. There's a lot of aggressive hedging going on with zero DTE because day to day positions are being moved around, right? So now we have some bigger levels up here at 510 that maybe that's going to be of interest tomorrow. But what I'll do tomorrow is I'll come in and I'll check for the fresh opening bell levels and see if I have a big gamma level at 510, if that lines up with real time price. And on top of that, I'm following the call option volume sentiment, which shows us today that as soon as we gapped higher, all we had were bulls in control. Call option volume was 60 to 30 pretty much the entire day. Pretty much the entire day. So anytime that I see a 20 to 30% differential, I am following that direction. So if I've got 60 to 30 or 70 to 0, typically I'm going to follow that direction for the day, especially if I have a gamma level that I can go after. So realistically, had I gotten the pullback, I would have looked to get long on the option. If I just bought in at the money, I could have bought a 502 long call. I could have bought the 501 long call, and I've got price up here for about $3 to $4 of direction. Anytime that I can take a long option, get my direction covered, and have those deltas change intraday, I can turn, a dollar or $1.50 debit into probably a $1.50 credit, which means I can make 100% pretty easy with a $3, $4, $5 move in the SPY. We're trading now, the SPY is at $6 a day. Getting an option that we only traded or trade for a $1.50, we can turn it into $4, $5, $6 a credit. Like I'm telling you, if you put these things together, whether you're a seller of options or a buyer of options, it's worth considering. Not every day do I want to be a seller of options, because in a directional day, your defined risk of taking 20 cents of credit for $80 of risk or 80 cents of risk, that's backwards. It takes 4 or 5 wins to make up for that loss. So on a directional day, I'd rather pay a little amount for my long option, be directional, and try to turn it into 25, 50% take profit, 100+% take profit. You can do that in 0 to 1 days, right? If you do it week to week, same type of thing. If you have a direction for the week, it's all good stuff. Okay, so like I said, for the sake of time, it's been 33 minutes. This is usually longer than the YouTube algorithm. Everyone likes the 12 to 15-minute video, and that's the sweet spot. I don't care. If you're still here watching the video, let me know, right? Tell me that you watched it to the end. I appreciate the comment. And I hope you like the time that I spent today on just how I trade. At a glance, this is what I do day to day. I'm extremely active in the stock market, indexes, options, and these are tools that I have up. My workspace at home is 4 monitors, right? The dream of, I'm going to work on my laptop and I can work from anywhere. It's not what I do. I like to sit on my butt all day from opening bell to closing bell, watch my 4 screens, have all this real estate to work with, and make good decisions, because that is how I make money. Okay. So if you have any questions, let me know. I appreciate you being here, everyone that's joining the channel and subscribing, liking, all that stuff. You know what to do in the algorithm, right? YouTube likes the smash the like button. It likes the engagement. So leave me a comment. That's really helpful. Join my Discord channel. If you leave me a comment, I've got a Discord channel that it's free for everybody, and it's called Chris Pulver Trading. That's the server. You can see me posted anytime I'm in my live sessions for YouTube. I also do some collaborations with A1 Trading, so I share my link with them as well. So anyway, that's it. Happy trading, lots of profits. Thanks for being here, and this will be another little feather in the cap for the Trading 101 video series, and we'll continue to grow that library out. And I'll see you next time. Thanks, bye.